Sawyer Silver Vault. Stop everything you are doing. Look at the screen. Bitcoin just flashed a signal that has only happened 3 times in the last 10 years. And every single time it happened before, life-changing wealth was transferred from the panicked sellers to the patient buyers. We are sitting here on June 13th, 2026, with Bitcoin hovering just above $63,000. The headlines are screaming about war, about inflation spiking to 4.2%, and about a new Federal Reserve chairman walking into his first major test. But underneath that noise, something else is happening. Something most investors are completely blind to. And if you aren't paying attention right now, you are going to wake up 6 months from now, wondering why you didn't see it coming. This is not a drill. This is not another maybe tomorrow prediction. The game is changing as we speak. Here is what nobody on mainstream financial television is telling you. While retail traders have been running for the exits, the whales just pulled off a massive $700 million accumulation event right under our noses. On-chain data confirms that when Bitcoin dipped into that $60,000 to $62,000 range, the largest holders in the world went on a shopping spree. We are talking about 11,422 Bitcoin moving off exchanges and into cold storage in just 5 days. What does that mean for you? It means the smart money just put a floor underneath this market. But that is not the part that should have you on the edge of your seat. Here is what is really going on. The Bitcoin exchange traded funds, the very products Wall Street fought for years to create, just bled out over $2 billion in June alone. On the surface, that sounds terrifying. It sounds like everyone is giving up. But as one asset manager told Decrypt this week, the selling is concentrated rather than general. What does that mean? It means the outflows are coming from leveraged funds and specific arbitrage players unwinding mechanical positions. It is not a broad exodus of true believers. In fact, right in the middle of this so-called bleeding, we saw Bitcoin ETFs pull in $85.9 million just yesterday. The money is not leaving crypto. It is just changing hands. And that brings us to the sleeping giant that most of the financial media has completely ignored. The United States government is quietly building a strategic Bitcoin reserve. Treasury Secretary Scott Bessent just testified in front of the Senate Finance Committee. He said the work is moving forward with all deliberate speed. This is not a rumor. This is an official statement from the highest levels of the U.S. financial system. They are building a fortress of digital gold using forfeited Bitcoin, and they are pushing for the Clarity Act to be passed this summer. If that bill becomes law, the regulatory fog that has hung over this industry for years finally lifts. But here is the twist. Even as the government wants to buy, the banking rules are still rigged against you. Right now, if a bank wants to hold Bitcoin, they have to hold an equal amount of cash against it. It is a 1,250% risk weight that makes it economically impossible for them to participate. But that is about to explode. 6 Republican senators just fired a warning shot at the Fed, the FDIC, and the OCC. They are demanding that this rule be replaced with a calibrated framework. If that changes, we are not talking about a few $1 million coming in. We are talking about the full weight of the American banking system being unleashed on a fixed supply asset. But there is a storm coming first, and this is where most people are going to get wrecked. Kevin Warsh is about to chair his first FOMC meeting as the new Federal Reserve Chair. The meeting starts June 16th. On one hand, J.P. Morgan is telling us that rates are likely on hold through the end of the year. But the whispers out of Washington are getting louder. Inflation is heating up, and the committee is split. We saw 3 dissenters at the last meeting who didn't just want to hold rates. They wanted to remove the easing bias. They wanted to signal that hikes are on the table. If Warsh stands up at that press conference and sounds the alarm on inflation, the stock market will dump. and Bitcoin will likely take a hit with it. That is the trap. Everyone is going to see that dip and panic. But here is the secret the whales already know. There is a wall of liquidity sitting at $53,000. That is the average cost basis for every Bitcoin holder on the network. Historically, that level has marked the floor of bear markets. We are holding 63,000. That buffer might not seem huge. But remember the accumulation we talked about earlier. The whales bought at 61,000. They are not going to let it collapse without a fight. This is the moment where wealth is created. When everyone else is watching the Fed and stressing over the news, you need to be watching the wallets. You need to be watching the exchange outflows. The narrative on the news is fear. The reality in the code is accumulation. We are at a crossroads. On one side, you have the old system. Kevin Warsh, 4.2% inflation, and a war dragging oil prices higher. On the other side, you have Scott Bessent building a Bitcoin stockpile, senators tearing down the bank barriers, and the whales vacuuming up supply. Which side do you think wins in the long run? Silver at $75 was just the beginning. That was the warning shot. That was the market waking up to the fact that the dollar isn't what it used to be. Now, the real move starts. The move where the hardest asset on Earth, the one with a fixed supply of 21 million, finally decouples from the legacy financial chaos. Do not let the next 48 hours scare you out of a position you have been building for years. The headlines will scream. The bots will spread fear. But you know the truth. The foundation is being laid for the next leg up. And when the institutional floodgates finally open, you want to be on the right side of that trade. Stay vigilant. Stay informed. And never let the noise shake you off the signal. For more videos like this, subscribe to our channel Sawyer Silver Vault and stay ahead of the next Bitcoin move.